Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. I wish you all the best if you're having a little bit of a long break this weekend for the Easter festivities. A very happy Easter to you. Markets. Look, stocks are tired. That's true. I think this oil price remains problematic. It's holding on to the gains. I've said it could be a little bit volatile. It could even have some correction here. But the way in which it is tending to hold on to those leap higher gains from earlier in the week suggests that oil could be building to go yet higher. And that causes all sorts of problems, as I've said previously and written about previously, for people like the Federal Reserve and the Reserve Bank. The Reserve Bank went on hold this week exactly as I had forecast, though I said there was a risk of 25. I thought they would go on hold, and they have, not because that's the best economic decision, it's just understanding the beast. They're not too bright at Martin Place, and that just continues to be reflected in their outcomes. So on that basis that they were not too bright, I was able to accurately forecast that they would be on hold. And in the accompanying statement, they would stress that more rate hikes are probably likely to come. Now, why would you elongate and maintain the sense of uncertainty among consumers, investors, business owners, extend and elongate that interest rate hike cycle the way the RBA has? And I think the main motivation, this is why I made my forecast, is that Governor Lowe's a little bit worried about keeping his job, and he's also wanting to regain some ground in the popularity stakes. And I think that probably that emotional input had more to do with it than anything else. Yes, the economy is slowing. Yes, inflation is coming off its highs, but it's still extremely high, and Australian interest rate settings are still at stimulatory levels. This is a big point everyone fails to appreciate. These are not high interest rate settings. Historically, they are actually highly stimulatory. So this is not the aberration that rates are going higher. The aberration was that rates were kept near zero when they should not have been. They probably never should have gone there in the first place, let alone be kept there during the post-COVID boom. So the RBA's created this economic roller coaster, as I forecast at the time they were doing that exactly this would happen. I said at that time that this would suck forward economic activity out of the future and it would leave a hole, a valley, and that's what Australia is falling into now. I said at the time the RBA was making a huge mistake, and it would make a second huge mistake when it hiked interest rates too aggressively, too late, with trying to deal with an inflation that is less now about demand than supply anyway, which is why I mentioned oil prices. Oil prices continue to move higher. Surprise, surprise, you can have re-accelerating inflation in Australia, but the RBA's just gone on hold. So what does that mean? They're probably going to hike interest rates further and aggressively. And I say all of that from the mindset of the RBA to understand what the RBA will do. If I was the governor of the RBA, I'd keep rates where they are now and weather the storm and allow for inflation to come down of its own accord at some point, knowing that consumers and businesses and investors do not need to be hit on the head with a sledgehammer twice. Just the fact that prices are so extremely high is enough. And just the fact that economic activity that would normally have occurred now has been sucked forward into the past, those facts alone, you don't need to keep raising interest rates. I would, however, be raising interest rates higher gradually, but over a very slow trajectory into the future, into the 2-3 years ahead. And I would never have raised aggressively as the RBA has. So it's not about what they should be doing, it's about what this not too bright organization will be doing. And Governor Lowe is probably on the way out. He's not going to get a second term. He should be sacked immediately. But he's probably on the way out, but he's hoping he'll regain some popularity here with the sitting government by putting rates on hold for the moment. So we'll see how all that pans out. These are all factors in determining what the future course for Australia's interest rates are. This is not hyperbole. This is what actually happens behind closed doors. This is how these people think. And yes, I have mixed at these levels. This is how these particular individuals are operating. And if you understand their operating system, you're going to have a better idea of their future decisions as well. I hope this helps, but in a nutshell, if you're going long equities on the idea that the RBA will be on pause permanently now or be cutting rates, I would not be doing that, basically, because inflation, if price of oil, watch the price of oil goes up further, doesn't matter that it's lower than the crisis levels. There's so much price pressure in the economy that any uptick in oil prices now will immediately flow through and add again to the CPI index. So the CPI. So keep an eye on the oil price. I would be cautious going long equities here. A lot of people want to go long equities here, but inflation can come back. The RBA can still be hiking because of its own mindset for some time to come. I hope that helps. It's not what you want to hear, but it's maybe what will help you. I hope. Touch wood. All the best for the weekend and the week ahead. Clifford, Bennett, Chief Economist, ACY Securities.